Good morning, everybody, and welcome to the Seiler Wealth Management video blog. I'm Lee Seiler, and I'm the President, CEO, Chief Cook, and Bottle Washer of Seiler Wealth Management. And I'm here today to just educate you, help you out, give you some ideas of what's going on in the markets, but also some practical knowledge. And I'm going to start with a question I had from one of my doctor clients. He actually called me last night while I was at my house. And he had a question, which is really probably a legit question that many people may have. And it's, we're starting back to school and college, and he was talking about student loans for his daughter. And I guess they had the option of a variable rate at around 2.5% or lock in a fixed rate at around 5.25 or 5.5, somewhere around there. So, he'd heard the news yesterday that the minutes from the last Fed meeting were released, and that the Fed was certainly, they are leaning towards raising rates. And it also actually raised the percentage chance that the Fed would raise rates in September. Not sure whether they will or not, but it looks like it's a 50-50 chance in September. Obviously a higher chance for the December meeting. So there's some speculation saying, would the Fed raise rates right before the election? I'm not sure the Fed cares. I think they're going to wait for some data and see what happens as far as the economy and what's going on here. So anyway, so the Fed's going to, look, we are going to be in a rising interest rate environment. The Fed raised rates in December, haven't done it since. They are going to raise rates. That's going to happen. So clients asking me, well, if they raise rates and the variable rate, et cetera, et cetera. First of all, and this is what I told them, I said, check and see if that variable rate loan has a maximum raising amount for the year. Now, oftentimes they can raise you maximum 1 percentage point per year with a maximum 5 percentage points, just like a variable rate mortgage in many cases. So he's checking on that. But I said, even so, let's say, and she's starting college for 4 years, let's say, all right, let's just say she's a great student, can be done in 4 years, which is very unlikely these days, by the way. You will go in, you pay that 2.5%, maybe you start paying it for only a few months. Then all of a sudden the Fed raises rates 25 basis points, let's say December. Okay, now you're at 2.75 because it's variable. It's going to go with the interest rates. Then all of a sudden they raise 4 times next year, 2017. And again, that's probably anywhere between 3 and 4 rate hikes next year. That's kind of what's expected. But let's say 4. So if you raise 4 times, now all of a sudden you were at 2.5, then you went to 2.75. Now after into next year, you're at 3.75. So now you're 1 year into college. But still, that 3.75 is still better than that 5.25 or 5.5 fixed rate. So let's say 2018, they raise another 100 basis points or 1 full percentage point. Now you're at 4.5, 4.75, somewhere around. You're still lower. And so I explained to him, I said, listen, rates are going up, but I think if you can get a variable rate and start out at such a low rate, maybe in her junior year of college, you may be back up to over 5%. But you've had those 2 years of lower rates. So, take a look at that. Look at the documentation. These are Sallie Mae loans, and they are specific for student loans. And the benefits are, of course, is that I guess they don't start paying. Rules are changing, but they don't start paying them back till 6 months after they graduate. So that's pretty good. Gives them a chance to find a job, et cetera, et cetera. Now, talking about college, and college we know is very, very expensive, but we do actually college analysis and cost analysis for colleges, and we can do it specific. If your child says, I want to go to the University of Florida, we can do it and base it on what it would cost the University of Florida. Or we could say a 4-year state school, or we could say Harvard. So we have the software to do that. So if we can help you, and you say, listen, I have a pretty smart kid, may want to go to Dartmouth or an Ivy League school. So we'll do run some analysis on the Ivy League schools and tell you exactly what's going to cost. We can even add in, say, okay, let's say they take 50% of the cost are loans. Let's say they get some kind of scholarship. You put something away in a 529. So we can analyze all that, and it'll determine, okay, in order to do this and go to this plan and work this plan accurately, you're going to need to put in $650 a month starting today for the next 10 years, whatever the case is. But so we can do all that. That's all part of our financial planning process. It's just college planning and retirement income planning. So we can do all that for you. So that's really, really good stuff. So please take advantage of it. So let's talk about the markets have really just been in a very, very narrow trading range. The volatility has been non-existent. just can't seem to get out of its own way. The market's kind of stall when it starts to run. I think that's a sign that, you know what, we are due for the pullback. And again, we've been taking profits, so we're ready to go. And if a pullback does occur, we have cash on the sidelines looking to participate and find opportunity. And that's what we're looking at. And some of the opportunity will probably be in these alternative investments. There's some very interesting alternative investments that we're looking at that are notes, meaning you're lending money to a company that spreads the money around to many other private companies, and you're getting a pretty nice yield. And I've seen yields anywhere from 6 to 9% for clients, and it's really, really strong. And the most important thing, it's not subject to stock market volatility. It's non-correlated to the stock market, does not care what the stock market does. Part of your portfolio really needs to be in alternative assets, because you can't have everything that is going to be set and live and die by the stock market, because we don't know what the stock market's going to do. We have an idea. Yes, over the next year, we're probably going to be higher than we are today. But what's going to happen between now and the end of the year? We don't know. The election's a farce. It's a joke. We don't know what's going to happen. Although we have an idea who's going to win the election, a pretty good idea, we don't know what's going to happen afterwards. So we will help you with that. We'll help you with your tax planning, a lot of things that we can do. Now, a week from today, I am doing, because by popular demand, and we have a lot of really smart women in our client base and our database that really like the women investing presentations that we do. So we're bringing it back next Thursday, but we're doing 2 webinars. All right, 2 women and investing webinars, one at noon. So for those of you that are at work and you take your lunch hour at noon, guess what? You can log on to the webinar, and we will do it from noon to 1, and then we're doing it again next Thursday. It's all a week from today, so that would be the 25th, and we're doing it at 7 o'clock as well. So next Thursday, the 25th, at noon and at 7 p.m., we're doing Women and Investing, and I encourage you, if you are handling your own finances or you want to learn more about finances and investing, please log on. It's absolutely free, and we look forward to seeing you on there. That's all I have for you today. Again, the markets are in a really narrow trading range, not a lot going on. We were up very slightly after being down most of the day. So again, earnings season's over. It's really going to be about the noise on the election, but don't listen to all the noise. All right. My concern is there's a lot of optimism right now, and I don't like it when a lot of people are so optimistic and complacent that the market's going to go up. That's when you have to worry. Okay. That's kind of the contrarian theorist in me. But you got to be really careful right now. All right, don't. Here's what I do like. I like the financials, because speculation rates are going higher. That's always really positive for the financial stocks or financial equities. All right, so we have some ideas there too, so we can help you. Anyway, I'm Lee Seiler, and hope you join us, women, next Thursday, 12 and 7 p.m. for our webinars. And as always, log on to our website, stockdr.com. That's stockdoctor.com. A lot of great information on there, and we will help you with your financial planning, your investment management, and all that kind of stuff. Anyway, you guys have a fantastic day, and I'll talk to you next week.